Hello, my friends. I am Peymon Mutahide, the president of Freedom Law School, which I created in 1996. In this presentation, I will show you why the IRS postponement of 1099K reporting of $600 or more credit card transactions is not a big deal at all. You see, this is the Form 1099K, the payment card, and Third Pary Network Transactions. It's not a big deal, folks, because you see, the news misleads us. IRS delays tax reporting rule change for business payments on apps such as Venmo and PayPal. That came out in November of 2023. And they say that if you receive business payments via apps such as PayPal, Venmo in 2023, you will not be subject to a lower threshold for 1099K tax reporting. How? For 2023, the old limit of more than 200 transactions worth an aggregate of above $20,000 will remain in place. Yep. And however, the IRS will implement a $5,000 limit for tax year 2024, applying to returns filed in 2025. Well, for 2023, they're going to leave the old rules and now go down to 600. It'll be 200 transactions or more, or above $20,000 of aggregate credit card receipts. But guess what? It's no big deal anyhow to begin with, and we'll get to it why. Where first, with the instruction form of 1099 MISC and 1099 NEC by the IRS, it tells us that this whole Form 1099K, it must be reported on Form 1099K by payment settlement entity under Section 6050W of the Internal Revenue Code. Yes, this is the book in my hand. You see the Internal Revenue Code, the federal tax laws. This is the Bible of the IRS with all the minutia, tiny font, tissue thin, detailed nonsense they try to bamboozle you with. I'm going to clear it up for you real easy in the next few minutes. Nothing to worry about, folks. So here we are from Title 26, Internal Revenue Code, Federal Tax Laws, Section 6050W, returns relating to payments made in settlement of payment card and third-party network transactions. So we go down to relevant language about this, and it says that each payment settlement entity shall make a return for each calendar year, setting forth the name, address, and TIN for each participating payee to whom one or more payments in settlement of reportable payment transactions are made. Well, participating payee is you who receive credit cards or Venmo, any kind of payments, right? Well, let's go see two definitions of participating payee, because for the purposes of this section, participating payee means, in case of a payment card transaction, any person who accepts a payment card as payment. Fine. Okay, but look, there's also another one here too, but the key is not here. The key is the exclusion language, exclusion of foreign persons. Okay, it tells that such term shall not include any person with a foreign address. Foreign from where? Foreign with respect to France, Japan, Egypt, okay, Russia, where? Foreign to the United States. But the United States is not what you think it is in the tax laws. Again, from Internal Revenue Code, we're going to look up definitions in Chapter 79. Here we are, Section 7701. When used in this title, what title? Title 26. Remember, folks, the federal tax laws, again, we are referring to. And they define things like United States and state. United States, when used in geographical sense, includes only the states and the District of Columbia. And state shall be construed to include the District of Columbia. That's right. So when you add District of Columbia plus the District of Columbia, you get the same. United States includes and means only the District of Columbia. As amazing as you think this is, Supreme Court says we must go by these definitions. In his Gould versus Gould case, which came out in 1917, the court says this: in the interpretation or understanding of statutes, laws, levying or imposing taxes. So in understanding laws and imposed taxes, it is established rule not to extend the provisions of tax laws by implication, by implying, beyond the clear import of the language used in the tax laws, or to enlarge the operation of tax laws so as to embrace or include matters not specifically pointed out. If it's not specifically said, it's not there. You see here, the term United States does not include any of the 50 states nor the state. New York, California, Florida, none of them are there. Therefore, they are not there. It's only District of Columbia, folks. That's all United States means. That's what the court tells us. And it tells us further that in case of any doubt, the tax laws, are construed most strongly against the government and in favor of the citizen not being taxed. So that means here in section 7701, look, United States means D.C. How about foreign? Okay. Foreign, when applied to corporation or partnership, means a corporation or partnership which is not domestic. Domestic is within the United States, which is D.C., yes. So the foreign address is an address outside of District of Columbia. If you're not from D.C. taking credit cards, you're excluded. You're not a participating payee, and there's supposed to be no 1099 issued to you because you're foreign with respect to Washington, D.C. Folks, for more details, you got to watch the longer complete video in the description below. Go there for a fuller, detailed understanding of this topic. And remember, the road to freedom starts from our website, freedomlawschool.org, folks. That's where you want to be to find your freedom, folks. All amazing information is there for you to be able to restore freedom, regain your power and freedom. Never again voluntarily pay the Washington, D.C. swamp legally and safely guaranteed. I love you all. Be free. Go to freedomlawschool.org and find your way to freedom now.